My name is Suen, as introduced by Andrew, and I'm a partner with Norton Fulbright. I've been in shipping for many years now, so I've seen a few cycles of shipping. And today, as we sit in the second last segment of Marine Money India, we're going to be talking and focusing on international investments in Indian maritime. And I guess this is quite an apt topic for several reasons, as we have heard today. I don't need to go into so much details, but India really is one of the fastest growing economies in the world. It has also developed an internationally competitive maritime sector, especially in the last few years. And we've also heard how the Indian government has great ambitions for it to be a shipyard nation. So I think in all, India has this vision 2030 to become a great maritime nation. So with this in mind and context, talking about international investments is quite apt. And I have the privilege of having with me two very distinguished guests here. Next to me is Bart. He is President and CFO of Ardmore Shipping Services, and Peter, who is Investment Manager at Borealis. They are both seasoned shipping names, and I hope that through this session you'll be able to hear their views on international investments in India. Okay, so first question for Bart. Well, first of all, many congratulations on Ardmore's Investor Day that we scheduled last week. Great results posted for the financial year ending 2024. So Ardmore is listed on the New York Stock Exchange. From the lens of a US public company, how important is India when you're looking at investments?
Sure, I think, well, it's great to be here. I'm actually in town as well for Anglo-Eastern Seafarer event. And for us, when I think about India, it's such a large maritime ecosystem, but for us it starts with our seafarers. And so we have a joint venture that we've had for a number of years with Anglo-Eastern, and just find that the quality of the officers and crew, and that you can develop within the larger Anglo-Eastern sphere a true dedicated crew-based culture approach. And so the human resource, I think, is just really strong and rich here. And then when we extend beyond that, things like the sale and purchase market, different players that would be here, charters, suppliers. So I think for us, whether we're a public company, private, just trading spot tankers on a global basis, India is going to be very important and extra special to us because the vast majority of our seafarers are from India.
From an investment perspective, what is the correlation of your importance to seafarers' welfare?
Yeah, no, absolutely. I think, when you talk about safety culture, when you talk about trying to create greater efficiencies, save fuel, reduce emissions, it really does come down to the team that you have on board and the coordination and support that you give them from the office. And so that's something. We have a number of our shoreside team here this week. We had a great day on Monday meeting with our officers and crew. You have to have those touch points. And we acknowledge too that we're actually taking the time while they're home on vacation period for this week. But I think for their support on board, just an example, we were one of the first ship owners to install Starlink across our fleet. And very powerful when your fellow crew can actually connect with their families and things like that on a daily basis. But also for things like all hands calls at Ardmore used to be our Ireland office, our Singapore office, Hong Kong, Houston on, and we used to think that was all hands. Now we have every vessel that's available, and obviously depending on where they are in the world and time zones, actually come onto the screen, be on part of our all hands calls, setting up calls between vessels in the office if there's particular problems or challenges. And so I think the world's changed. You have to adapt, and at the same time they have an even longer list of things to do as you're trying to evolve and adapt new technology, and so you have to be as supportive as you can.
Yeah, so would you say like investing in crew welfare has been crucial for maintaining a competitive edge for Ardmore?
I mean, absolutely, 100%.
That's a good investment. Okay, now moving on to Peter. So Borealis, you have a global presence and a dedicated team of highly experienced professionals, and you look at projects from an investment angle. With that lens in place, how are you looking at India in terms of opportunities for investment?
So we, as you rightfully pointed out, have a very global scope. The company was set up in London, but we have presence from London to Singapore and everywhere in between. We first raised capital in 2010 onwards, when shipping was in a much worse state, generally speaking, than it is now. And with the changing of times in shipping, it's also changed our strategy and the type of capital that we raise. And so where our initial funds were more focused on distressed type of opportunities and asset plays, the most recent capital that we have raised is more infrastructure-like in nature. That essentially takes us into a more yield play type of approach. The capital is also more Asia-oriented, and obviously with India being such a significant part of the upcoming Asian growth, it's a natural part of the world for us to focus on. And we are indeed doing more and more India trade with the vessels we have, but also actively looking for how can we invest more directly into India, how can we participate in the trade growth that is happening in the region. Now, I believe 3-4 years ago, we had no presence in the Middle East. We now have 3 people. Middle East obviously being a very good middle ground, time zone-wise, from our headquarters in London, focusing on Middle East and Asia. And so, we're actively looking at the region and expect to ramp up activity here.
Okay, when you're looking at activity in India, is there a particular segment that you might be interested in?
So Borealis by nature is sector agnostic. We have been a significant owner in container vessels, chemical tankers. We bought OSVs in 2018 and 19, and with the most recent capital that we have raised, we have container vessels, tankers, and dry bulk. We're agnostic. I think for the sake of investing in India specifically, and India-related opportunities, we wouldn't focus on any segment per se. We would look at where do we see opportunity at the time, and that changes with the times as well.
Okay, so you're flexible.
Very flexible.
And so, what sort of qualities would you see, or what people expect when you're doing business with Borealis?
So we're fortunate enough to have raised a significant amount of committed capital. We are, as I said, sector agnostic, and we're a small and agile team. So we move quickly when something works, and we have the firepower to do it in scale. We are finance-oriented shipping people, so we know the industry very well. And so I think people can expect industry know-how and agility, basically.
And then when you're looking at the approach to investment, what is the Borealis approach to investment and capital allocation? So
at core, we are an investor, and effectively we're looking to make a good return on investment. That is our core focus at the end of the day. And so what we're typically looking at is, and specifically now where we are in the cycle, we're trying to figure out where can we find the right intersection between asset values and earnings, basically. Are we buying on top of the cycle? Are we taking too much exposure to spot markets? And so our approach recently has been to try to acquire vessels on unemployment. We're flexible in terms of structure. We can do TCs, bareboats, happy to take residual value risks on our investments. But that is kind of the core investment approach for us.
Would you say employment is a key?
Currently, yes. Also partly because we want to partner with other operators in the industry.
Okay. I mean, same question for you, Bart. I know that Ardmore, you have a big focus on capital allocation priorities. In fact, you have a plan on that as well. Would you like to share more about that and your views on capital allocation?
Sure. Yeah. As I was joining Ardmore a few years ago, I was really happy actually that they had an actual written plan on capital allocation, which for a public company sounds kind of basic, but actually is a differentiator. And I think a lot of the commentary today around capital allocation for the public companies ends up actually being just discussion on dividend policy, but you really have to expand it to full capital allocation. So in the really tough markets, we think about capital allocation in terms of a waterfall, where you obviously have to maintain your fleet and your current earnings power to keep generating cash flow. And then over time, that fleet is going to age, and there'll be some natural replacement. And in addition to that, opportunities to make your existing fleet more efficient, especially when you take it through dry dock cycles. And there's been a number of topics today discussed about the different enhancements. And then leverage. We like to maintain low leverage through the cycle. I mean, this is the point in kind of the stronger market environments that we would take leverage down further. But we have a goal of trying to stay below 40% leverage. We're mostly spot exposed, and we think it just gives us more flexibility to maintain a lower leverage level. We're always looking for potential accretive growth opportunities. I think the key word the last few years has been kind of patience and just diligent about that. And then when markets are strong, you have the opportunity to return capital to shareholders. And so we have a policy of returning 1/3 of our earnings as a dividend to shareholders. That is different than some of our peers that have a fuller payout model. For us, we think that we want to pay out 1/3 of the earnings, but then still have capital available to use for those other priorities. And then we saw good value last December, and actually did a brief buyback period as well, and bought back 4% of our shares as another way for rewarding the shareholders.
Patience and diligence are the words that I heard. Careful in summary of what Bart just said. So basically, careful consideration of the market conditions and being patient and diligent. So let's right-click into investments in a little bit more detail. We've seen strong earnings across sectors in shipping, and it's kind of like the biggest win for most owners in this room. In the strong market, from an owner's perspective, how do you decide what you want to invest in?
Yeah, well, I think, you can't lose the discipline, and so you do have to have, we're an owner-operator, we look to create value for shareholders through shipping cycles, so naturally, when your asset values are really high, you might look at a number of deals, but actually not transact and just generate as much cash flow as you can from your current fleet, but then be in a position where if things align enough, similar to how Peter was talking about, that kind of crossing of earnings, market values, your go-forward views, when do you actually potentially engage in transactions? And I think it's a never-ending discussion. I don't think you're ever going to time the market right, so I think part of that is having a conservative capital structure, low leverage. We've taken our cash break-even down to $11,500 a day, so we can generate cash flow pretty much in any market environment. And then that also means if we lean in and we do a transaction that really, relative to our overall capital structure and fleet, it's something that we hope we get right, but if at the margin asset values change, the company's going to be fine. And I think in prior cycles, there was a lot of potential equity value destruction in weak markets, and for us, it's, we've got to be able to withstand the cycles.
Would you agree with that? What's your view on this question? How do you decide what to invest in?
Yeah, so clearly we're coming at this from a slightly different angle than Bart and his team. Our capital we can't really distribute as dividends because we need to invest it first. So we have no alternative but to invest. But at the same time, we also have the flexibility to invest in any shipping segment that we want and where it makes sense. Clearly, that gives us flexibility. So what we're trying to do now, over the last 2-3 years, you can argue that all shipping sectors have been doing quite well. But this is where our employment focus comes in, where we will invest in an asset if we can see that we can take our exposure down to a level where we're comfortable, call it a normal or normalized market environment throughout the duration of the charter. That's kind of the core, or the crux of the investment strategy. Now you can see the bearishness in dry bulk recently have opened up opportunities where we can be a little bit more opportunistic. So we always try to play that cyclicality, that short-term cyclicality, and do investments where it makes sense and do fixed long-term when it makes sense, and try not to buy on the top of the market and stumble basically.
So again, flexible.
Again, flexible.
Agility. Yeah. Okay. So from a decarbonization point of view, and investing in modern, investing in decarbonization is quite important to Ardmore. Can you share a bit more on, your investment strategy in this and why this is important from your lens as a ship owner?
Yeah, sure, no, absolutely. So Ardmore set up an energy transition plan in 2021, and we took the approach that the typical ship owner has superintendents looking after groups of vessels, and then every dry docking cycle, all of a sudden the list grows. They say, can we really work on vessel efficiency during this dry dock? And we thought we needed a more holistic approach. So we've actually taken and have an innovation team focused on energy transition, and a committee that comes from all the different departments at Ardmore. And it's really about making it much more of a experimentation, look at a number of technologies, pilot earlier than we probably would in the past, and we can because we have a strong financial position, and then if you do get conviction, roll it out across the fleet quicker. So just as an example, like over the last few years, we've looked at 200 different technologies, hardware, software, combinations. We've deployed 20 projects, so 10% of them. That's a very different mentality for engineers. I mean, I'm a naval architect by background, haven't practiced in a while, but I think that actually the experimentation side is really important. And then maintaining the low leverage, and then having dry powder, where for us, taking vessels through dry dock, and then at times we've doubled the CapEx with these high return, short payback projects. We think that that's something that you can do all day. At the same time, the team has a seat at the table, working with class, working with our charters for what the vessels of the future may look like. But still, and I think with a lot of the discussion today, uncertainty around fuel, specification, regulation, tougher to actually move forward at this juncture and say to like our shareholders and our board, we think that you should order X vessel with this specification, but I think all the learning from that will be applicable when you get greater visibility.
Okay, thank you for that. So I guess, I'm a 5-minute warning, so let me just summarize what's happened so far. I think in short, this is quite a difficult time to know what to invest in, but the idea is to diversify, chase opportunities or chase niche opportunities. Quick payout is important. Keep an open mind and broad diversification. But I think also understanding obstacles can also provide a realistic view on what to invest in. So, in your view, maybe Peter can start first. What challenges do investors face when entering the Indian maritime market, and how can these be mitigated? From your view from the outside, looking in.
Yeah, so we are actively looking at how we can expand business here. You know, clearly there are a couple of obstacles we as an investor see, which we obviously need to overcome. And this relates to India, it relates to Malaysia, it relates to Indonesia, and you know, all these places where we see you know, cabotage and local opportunities, but are markets where you know, entering is not necessarily as straightforward. So clearly, as an investor, what we want is to have, of course, free capital flow. We want to be able to withdraw capital at any point in time. We want to be able to upstream dividends to our investors and ensure, you know, continuity of cash flows. At the same time, you know, we want a stable regulatory framework, a functioning judicial system.
The perfect world, basically.
We want it all. But as the question specifically relates to India, of course, you know, there's been a lot of mention of gift seeking, and I think this is one of those approaches where, you know, it makes it significantly easier for us as an international investor to look into the Indian market and see, okay, you know, this is a framework that we're familiar with, and you know, which we can understand and be more comfortable with. So that's certainly something that we're looking more actively into.
Your views on this? What challenges do you think you might face when entering the India? I mean, you're already in India, but you know, when you're looking at it from an investment lens.
Yeah, I mean, I think for us, just from the experience, I mean, it comes back to the right team relationships. I mean, you have to have, I think, that local content and build that trust and culture, and then expand upon that. I mean, it took us a number of years to develop the relationship with Anglo-Eastern, and then, for example, like we evolved it further last year. We were using a second technical manager as well, and we actually rolled all the vessels into the joint venture we have with Anglo-Eastern. And now we're actually seeing progress in terms of team members that have been on the fleet that are shoreside working, you know, Anglo-Eastern, that are basically leading, you know, co-leading our effort from Ardmore's corporate office as well. So, yeah, I would say team and relationships are certainly key.
Okay, we have literally 10 seconds, so I'm going to ask you to summarize in one word, both of you. Describe your outlook for investment opportunities in 2025. Just one word, because we're out of time.
Volatility is the key word for this year.
Oh no, a positive word from Peter then.
Radiance.
Great. Okay, that's great. Well, thank you for paying attention, and please join me to thank our panelists.